You got to stick around to the end of this week. The meme of the week is hilarious. I got a kick out of it. All right, so the government has shut down. That's probably not a surprise to anybody here, but let's talk about what that means for us in the mortgage world. Ultimately, before we get there, let's talk rates. Rates are still in the low sixes. This is the mortgage-backed security. So remember, again, green is good. Like going higher means lower interest rates. I know it's backwards, but that's we're gonna treat you like adults and understand that we all know what we're looking at. But look at this. The last couple weeks, call it 2.5, 3 weeks, rates have actually gotten higher. Went sideways for about a week, week and a half, and then they actually came higher. Now, in the last 2 or 3 days, we've gotten better. So what's interesting is with the government shutdown, I don't believe we're going to get job reports tomorrow, and that was going to be a big deal. So part of the reason why the last 2 days we've gotten this big lift is because ADP reported negative numbers for the jobs report for their jobs report. So it's the best we have to go on right now. We'll see if tomorrow we actually get the job reports. I think not, but I had a source that I actually trust say we might get it, so we'll see. But I want to point this out. This is the last year. This is 12 months of a look back. And the reason why I show this is if you look back to 2024 on the left side, rates, they were this low this time last year. And I thought too, thought, man, rates are finally coming down. And then they didn't. So I share that with you to say, if you're thinking about refinance or know somebody who is, if the numbers make sense, don't get greedy. We're refinancing people right now that are saving $300, $400, $500 a month, and that's awesome. And these are the folks that chose not to pull the trigger, despite what we recommend, because we always recommend if it makes sense, do it, because I can't predict the future. But these are folks that didn't do it last year. And with rates, they can be in the fives, depending on the program and the structure. We got rates in the fives. Again, you saw, what you're about to see, we haven't shown it yet, the 6.3 or whatever it was. For that's usually kind of generically speaking. So again, if you're looking at a refinance, or if you haven't looked yet, do it. At least if nothing else, figure out your strike price. But I want to make the point, just because we think they're going down, doesn't mean they are. So the government shutdown, what does that mean? Right now, on day 2 of this thing, not a lot for today's purposes. The biggest one is if you're trying to get flood insurance, you're kind of hosed right now. That's the biggest one, or USDA loans. But for the majority of the market, I'm making this number up, 95% of loans out there, you're fine for the moment. Now, again, if stays this way next week, could be different because right now, like the government-backed programs like VA and FHA, they're reduced staff or if they're closed because we as underwriters or as lenders can still make our own decision. But sometimes on the hairy deals, we have to call and get guidance from VA or FHA. And for that reason, they're not there to answer the phone. We may not make that loan until they come back online and be able to help us walk us through it. So I'd say, again, the majority of the deals, we can move forward, but like 1,400 loans a day are not funding just because of flood insurance. So again, a week from now could be a much bigger deal. But for the moment, we'll keep doing what we do, close when we can. And here's what's interesting. You saw the rates went up a little bit. Refinance applications fell 21% just in a single week. That's amazing. So again, I would just tell you, if you know somebody's looking, get out there and run the numbers down to figure out what you need. Mortgages locked below 5%. I didn't realize it was still this many. 70% are still under 5%. So 70% of mortgages still have a rate lower than 5%. Crazy. I want to say, I read this about a week ago. I want to say it was like 77% initially were at rates lower than that. But again, people move, people refinance, people cash out, whatever it is. They get divorced, they got to sell the house, whatever it is. So it's still about 70% or under 5%. I thought that was a lot. For the expectations, because there's a whole bunch of chatter, which I've seen about a bubble. Look, at the end of the day, like Texas is one of the few states where we do have more inventory than probably what we should, meaning like more inventory now compared to 2019. But in general, as a whole, you can see these people from Fannie Mae, they had their panelist out and they basically said, hey, what do you think the home appreciation is going to be for the next year, 2 years, 3 years, and beyond? Basically, the average was about, call it 2.5 to 3% per year. So you guys can see if you really care and want to zoom in, you can do it, but it's about a 2.5% year-over-year appreciation, which means in 5 years, you're getting 16%. On a $500,000 home, that means you're getting like 80 something thousand dollars over the next 5 years of appreciation. Now, again, that's nationwide and pockets exist, but still, again, I don't see the bubble. Yes, there'll be pockets, there'll be neighborhoods, there'll be communities, or maybe somebody's overbuilt or something like that. But the reality is still a good housing market. I just like this. I just saw this and thought, good for Indiana. Small, are the best small cities in America. I don't know what comes up for that and how they make it, but look at Fisher, Indiana, number 6. Go Fisher. All right. Product of the week. Breaking news. It's not formalized yet, but supposedly the loan amounts for Fannie and Freddie conforming loans will eventually get increased. And the guess right now is it's a pretty exact guess, 830,000, 695. That's up. Let's just use round numbers, roughly 23, 24 grand, give or take. So it's a good news that we're getting higher loan amounts. It means more people can avoid jumbo financing. Yes, we are doing loans above normal conforming limits at the moment. Not exactly this number because again, we got to guess and hopefully we're guessing right, but we're getting up there and above. So if you do have somebody that's looking at jumbo, I would absolutely make sure you talk to a lender like the Mortgage Mark team that can help do this now and not take a jumbo loan if you don't have to. We were talking refinances earlier. We just did a reverse mortgage where somebody wiped out $35,000 in debt and kept their home because they were having some issues financially with a reverse mortgage. Reverse mortgages, they're not credit driven, they're not income driven. It is truly just age driven. I've gotten to know reverse mortgages a lot better here recently. They are a phenomenal program for the right folks. It is awesome, awesome, awesome. So if you have questions, reach out to us. Happy to answer them. All right, so here's some of the fun stuff. If you live in Dallas, you may recognize this house. Last year, they did this massive display for Christmas, and it creates all kinds of havoc. It costs, I think, Dallas taxpayers, which I'm one of those folks, like 30, 50 grand, something like that, in just tax revenue because of all the police escorts that had to happen for traffic. Now, apparently, and I'll go by this weekend to see it, they're now doing Halloween. So this is their house. This is their front yard. It is real. I can verify this is real. It's absolutely incredible. Oh, there it is, 25,000 in police costs. I said 30 initially, so I was close. But yeah, that's your neighbor. I would not be pleased. I do have a buddy that lives on that street, and my wife has an uncle that lives on that street. Suboptimal. And for just luxury homes like that one, I just thought this was interesting. Here's the top 10 most expensive sales so far this year. $133 million for a home. That's crazy. But a couple of these I saw, like Rosie O'Donnell's name was in there. Who knew? Let's see. I think I saw, who else did I see in there? Julia Roberts. She was $30 million in Hawaii, so good for her. But 4 of the top 10 were in Florida. So there you go. And then lastly, I love this. When I first saw this, I was like, okay, I see a copperhead, I see a black rat snake. So the biggest snakes in order: number 1, black rat snake; number 2, Rocket Mortgage; number 3, Loan Depot. I loved it. Number 4, common water snake and beyond. I just thought that was really funny. It's good work for the marketing team to find that. And then evidence of success. Who got the shout out this week? Let's see. Tamara and Joel. Love it. Go team, go. Appreciate you and appreciate the client that's sharing that. We always love hearing that from our folks. And then we love hearing from you. Share, subscribe, all the fun stuff you know what to do. If you have questions, certainly reach out to the Mortgage Mark team. We are here to help. And when you think mortgage, come on, you know the words. When you think mortgage, think Mark.